you outside. Very good to see you all. Thank you for joining us here in the Conservative Home Theatre this morning. My name's Angus Parsad-Wyatt. I'm not Giles Dilnott. You'll notice I look very different. I am the Director of Political Engagement for Total Politics, which is the group that owns Conservative Home, along with the House magazine Politics Home and others. We are here this morning, as you all know, to talk about the long-term competitiveness of the UK and ensuring that we remain a world-leading financial centre. We are delighted to be joined by our panellists with us here today. I will ask them to introduce themselves as we go along the line. Over to you.
Morning. Hi, everybody. I'm Helen Bower-Easton, and I'm Director of Communications at the Financial Conduct Authority.
I'm Mark Garnier, Conservative Member of Parliament for Wild Forest and Shadow Economic Secretary to the Treasury.
Miles Selleck, Chief Executive City UK, the private sector practitioner-led representative body for financial and professional services.
And Anna Purchase, Vice Chair and London Senior Partner for KPMG, and I lead our work in the professional services sector.
Lovely, thank you all very much, and good morning and welcome to all of you. I should say we are live streaming the event too, so welcome to everyone joining us online. So I think we'll lead with the question which is on screen, and I'd like to put this to all of you, which is how can we ensure the long-term competitiveness of the UK as a world-leading international financial centre? Miles, can I come to you first on this, please?
Sure. So, I mean, I think everybody in the audience will be familiar with the sort of stats around this. The UK is one of the world's leading international financial centres. Independent surveys such as ZEN consistently put the UK alongside, or London alongside New York. It's a massive advantage for the UK economy in terms of the tax that it raises, the economic growth that it provides, the 2.5 million jobs. But also, it's very easy to get lost in the sort of abstract millions of this and trillions of that. I think the important thing is that when people start businesses, when they buy their homes, when they save for retirement, when they ensure what's important to them, it's this industry that makes it possible. So I think there's an acceptance and understanding, and certainly the research we've seen shows that this has improved since the financial crisis, of the role that the industry properly enabled can play. But we've been doing a considerable amount of research recently in terms of looking at what the future of the industry ought to be, how we stay relevant. And by the time this exercise, which we're doing alongside PwC and various others, is completed, we will have spoken to about 300 people across stakeholders, across industry, government and elsewhere. Biggest exercise of its kind conducted that I'm aware of in recent years. And what's come out is there is a risk of complacency. There is a risk that we're taking this far too easily, that there are centres such as Dubai and others that are closing the gap between us. And that is something we ought to be much more focused on. And there are a number of areas, I won't go into them in too much depth, but there are a number of areas where we're just going to need to be much more competitive. So tax is absolutely one of those. That's not just about the rate. We have the world's most complicated tax system in the UK. The Office of Tax Simplification was shut down and has not been reopened. It had good people when it was there, but wasn't taken sufficiently seriously. Technology is an area where we need to make sure that we're not falling behind, and everything that's happening with the Trump administration in the US, I think, runs that risk. Talent, one of the huge advantages the UK has had, is that it's been very easy to attract high-quality people to come to the UK and work in the UK. That is becoming harder, partly because of tax, and partly because of the sense that the UK is not a terribly easy place, or as easy a place to do business anymore. And regulation, I'm conscious we have the FCA on the panel, regulation is a factor in that. Now, I should say, for full openness, I pay tribute to the work that Helen and her colleagues are doing at the FCA, but they need to have a clear political amount of air cover to make sure that if we are asking regulators to regulate not just for risk, but also for growth, that they are given the support to do so. And then the final one I'd raise about how we remain open is the era of globalization, or maximum globalization, is drawing to a close. I think that's self-evident. We are going to be operating in a much more balkanized, much more friction-heavy, much more protectionist, and much more populist environment. All of those are bad for financial services, particularly for a financial services centre like the UK. So one of the things I'd love to expand on as this panel goes on is how we make sure that we are the world's leading neutral international financial centre. And by that, I don't mean that we withdraw from NATO or anything like that. It's just that when you do business in the UK, you know that there will be a minimum of political interference with the regulators, a minimum of political interference with companies. It will be open for talent, open for business, and it's the place where the world will want to come and work.
Thanks very much, Miles. I'm sure we will come back to that point about neutrality and kind of political wins later on. Mark, please.
Well, I think Miles more or less covered the whole thing, actually. It's absolutely fantastic sort of discourse of what's going wrong and what's going right in the city. I mean, my background is I was an investment banker, and I started my career on the floor of the London Stock Exchange back in what we like to refer to as the olden days, when there was still a stock market. So I've been following this for many, many years, since 1982. And I found myself, when I got elected, on the Treasury Select Committee during the time that we were rewriting the regulations surrounding setting up the Financial Conduct Authority and the PRA. And then I was also on the Parliamentary Commission on the Parliamentary Commission for Banking Standards, when again we brought in, so under both that bit of work, we brought in the Financial Services and Markets Act 2012 and the Banking Reform Act 2013. And it's been very interesting. And when I became a minister, I went off and did other things. And now that I've got this role, it's quite interesting for me to be able to come back and see is what we envisaged back in 2012 and 2013 what's actually happening now. And of course, there's been a major change, which is leaving the European Union. So we've had to make a decision about how we regulate the City of London. And I can remember there's a lot of lobbying going on at the time, which is either do it the European way or do it the American way, but don't create a third way of regulating the City of London. But I think that what we've found is that there are a whole lot of sort of issues which have come about, which are causing a problem. I mean, because of my background in the stock market, I tend to look at what's going on in the London Stock Exchange as the kind of the pinnacle of the city, which is a mistake because obviously it's not. But the London Stock Exchange is now, I think, the 23rd country in terms of new listings. We've seen some sort of fairly amazing numbers where we've seen huge. I think we've last year just 88 companies left the LSE, while only 18 joined last year. So we're seeing a massive decline in the interest in equity investment. And that's incredibly important, by the way, because stock markets are exit routes for venture capital funds, or can be exit routes. And if you can't raise money in the stock markets, then you're not going to be able to kind of get money sort of floating into the wider economy. It has to be sort of private equity, which needs to know how it's going to get out. And if you can't get out, you can't get the money into the private equity in the first place. So there are a whole load of different problems. But I think one of the things we've been doing, as Kemi was mentioning yesterday, is we've been going through a whole piece of policy renewal. And there are certain things which are sort of going into the pot. And I don't think we've got any announcements. Actually, having said that, Mel could be announcing literally right now as we speak. And I haven't seen his speech, so I may be sort of confounded by this. But I don't think we've got any particular announcements coming out. But what I can sort of talk about is what the kind of things we're looking at. Ring fencing of banks, for example, was it a good idea? On the Banking Commission, we were looking at ring fencing. We were looking at the Howard Davis review, which had an idea, but there was Ernie Lickenen who was doing it in Europe, and then of course they were looking at ring fencing in America. We were the only ones who ever did it. So have we made a mistake about that? It's something we should revisit, I think. MiFID II. One of the problems with the London Stock Exchange is there just isn't any research into businesses outside really the FTSE 250 sector. So any investor needs to have research on the businesses they're going to potentially invest in. And if you don't have research, you don't have that sort of secondary market, or active secondary market, share prices slump. And I was talking to a tech startup recently where it had a market cap of, I think, £48 million. It wasn't a huge company. They got a listing. When the share price slumped, so the market cap was 2 million, and nothing had gone wrong. They delivered everything they promised. When it was 2 million, they phoned around all the shareholders and said, should we delist? Because if we delist, rather than having a market price, you can put it in your books as the investment price. So by delisting, they had a book entry of 48 million again. So, but that's not helpful, having a stock market that doesn't work. So looking at MiFID and the unbundling of commissions. Friction taxes. Stamp duty. Should we be charging stamp duty on share transactions? I mean, so by the way, I'm not making any fiscal commitments at all. If there's any journalists here, please pick it up. But it raises about £4.5 billion. It's the easiest way of raising money for the Exchequer, but it gets in the way of share transactions. Should we do that? The tax rate on banks. When we brought in the bank surcharge and bank levy, it was because they was trying to achieve three things. One was it was seen as a punishment to the banks of the financial crisis. Two, it was helping government get paid back for the money it invested into the banking system. And three, it was almost like an insurance premium before we delivered the outcome of the Banking Reform Act 2013, which was delivered in 2019. We're well past all of that now. We've got moved on. So do we need to have a bank levy making us uncompetitive with other parts of the world? So we need to have a look at that. Other things, retail distribution review at the most basic level. It was told to me, sort of anecdote, and I need to check these figures, but prior to the retail distribution review, which came into effect on the 1st of January 2013, something like 60% of people, 50 or 60% of people had a financial advisor. That's now dropped, I think, to 9% of people because of the provisions of the retail distribution review. So should we have a look at that again? What else have we got? I've got regulatory permafrost here, but I don't want to upset Helen, so I won't go to that one.
It's feeling cold already.
It is a bit. And then the other thing, which I think is incredibly important, is, and Miles mentioned this, is technology. The City of London has been unbelievably innovative in financial services since Jonathan's coffee shop started marking up share prices on the wall, and it gathered together a whole load of people like me who wanted to trade in shares. So we have to embrace crypto assets, digital ledger technology, distributed ledger technology. If I knew the name of it, it would be a help, wouldn't it? But it's all of this stuff is incredibly important. We've got to be on the forefront of technology, and that's not just about how to use it, but also it's how to regulate it, how to understand it. So stable coins, you can have share registers using DLT. So there's all this stuff which we can embrace, and I think we need to really sort of step up the game on that. And the first thing is the digital gilt, which we've been talking about a lot, but we need to get that going. There's a whole load of other stuff, but that's a few ideas which we're kind of looking at. And I promise we'll be nice to the regulator, Helen. But anyway, thank you.
Thank you very much, Mark. Nice segue. Helen, regulation's been mentioned already by Mark and Miles, but to let you have your say from your perspective on things. Obviously, there is that tension between regulators trying to make sure that we're doing things the right way, but also that kind of risk-taking nature that might be required to really drive growth and investment. So what's your response to this kind of key question today?
Yeah, thanks, Angus. And I'll try and build on what Miles and Mark have said. So I think, absolutely we've got to look at have we got the regulatory framework right. We would say it is important to have high standards in financial services sector. You need there to be trust for both kind of consumers and different types of businesses to be using that sector. And the more trust you can get and the more confidence to use it, that in itself can create growth. But we also recognise there's more that we can do to be both sort of reducing reporting requirements, taking away unnecessary burdens. We set out 50 initiatives at the start of the year that we would take this year to help support growth. And it even surprises me that I can sit here in October and say we are on track to deliver all of them. I think, touching on a little bit of what Mark was saying about the kind of investment regime, we have simplified the listing regime. We introduced the biggest reforms in a number of decades last year. We haven't stopped there. We're reforming the prospectus regime, so it's easier to raise capital and encourage investment. We're bringing in new public offers and admissions to trading to ease retail access. And I think the point about kind of financial advice, what we're doing with our sort of new targeted support of introducing a new way for people to go and get a level of kind of support as they make key financial decisions, I think could be really powerful. So there's what can we do on the regulatory framework. I think there's also something about just the process to get regulated and how we support firms as they scale up and grow. So we've done a lot to speed up and accelerate the authorization process to become regulated. We are now looking at how we deliver more bespoke support to early and high growth firms and also developing a scale-up unit. We have to make sure that we're attractive internationally. So how do we continue? Well, I think as Miles touched on, outside the EU, looking at that global landscape, how do we continue to lead and shape the international standards? But how do we also make it easy for firms overseas and potential inward investors to understand how to navigate the system? And so we've been working on what's sort of known as a concierge service to help with that. And then finally, I think it is important that there's certainty and predictability. You know, that's a lot what we hear from firms. So how collectively across the system can we deliver that? And that comes back to the point you touched on and risk. How do we get the culture right around risk? It's all well and good for everyone to say now the regulators should be letting more sensible, responsible risk-taking into the system. When something goes wrong, as it will, in 6 months, a year, few months' time, are the same politicians going to sit there and say, no, absolutely, we accepted that. We said you should take risk in the system and we'll stand behind it. Because if not, we're not going to get that certainty and predictability we need.
Thank you very much, Helen. And Anna, sorry to come to you last on this question. Hopefully there's more you can build on this for us.
Yeah, absolutely. I'm going to go big picture and let's look at what the financial services sector and the professional services sector bring to the UK economy. Absolute jewels in our crown, both in terms of way we grow, but the way we enable others to grow, really fundamental. I think it's good that we now have roadmaps for both sectors. Roadmaps do provide the certainty that Helen referred to, but of course only if they're then delivered. So all focus now has to be on how we deliver those roadmaps for growth. What should we do? We come from such positions of strength, so I think we should be really clear on what we do well already and where we do it. I'm sure we'll come to that across the country, this isn't just a London-centric conversation. So what do we do well? Where do we do it? We have to continue to raise our profile as an international leader in these areas. Yes, climate tech, fintech, use cases for AI, all of these areas where we add huge value. And third, and really important, we have to continue to look at the narrative around our sector. We are a success story for the UK, and I'd very much value there being more commentary on that.
Thank you very much, Hannah. So one of the things that's come up in a lot of the answers is around stability, certainty. It's what businesses need, it's what markets need. And I want to sort of start by thinking about the political environment we're in. We are obviously only a year into a new government, but it's a new government that's already facing challenges, shall we say. And I think the certainty of what happens at the next election is very unclear at this point. What kind of engagement are we having across the sector early on to understand where in this multi-party system things might go and to try and build some of that consensus? Because I think for as long as it was a debate around sort of between the two main parties as it was historically, there was a bit of a consensus of, okay, this is an industry that knows what it's doing and it knows its value to UK PLC. There's obviously challenger parties that might take a different view. Miles, do you want to start us off on that?
Thank you. Allow me to tiptoe through that minefield. So look, I mean, what the industry wants is pretty much the same, frankly, whoever's in power. We don't amend what we need in order to provide the best outcome for our customers and our shareholders and the communities we serve because of one party or another being in power. So we are having conversations, as we always do, with the opposition, with the government, with other parties. And what we are emphasising, what we will continue to emphasise is, look, this industry, exactly as Anna says, is a jewel in the crown for the UK. That you do need to maintain an approach that thinks not just, if you like, vertically, but horizontally, by which I mean how does this industry enable growth in other parts of the economy. So it's not just about enabling growth in financial and professional services, but how do you drive growth in other bits of the economy, including technology, including as we have to rearm, etc. And also the importance of, as much as possible, a technocratic approach rather than a politicized approach to that. And I would argue, this is reflective. We've touched, Mark rightly touched on the RDR. We've seen the consequences of over-politicised approaches to the industry that have often been done for the best of intentions. So the RDR was the Retail Distribution Review was a response to a number of bad actors in the industry. What it ended up doing was penalising most of the vast majority of companies that had acted perfectly properly and has subsequently reduced the amount of financial advice in the economy, as Mark said. said, we are in a situation now where today we have fewer people receiving financial advice than we did 20 years ago. We have fewer people owning shares directly than we had in the 1960s. We have fewer people actively involved in managing their own finances. Now, that's not all a result of regulation, but it is often a result of sort of populist political pressures to issues going on. So our view is always, firstly, from a domestic perspective, avoid populism, and secondly, be aware the UK doesn't operate in isolation. You know, we are one of the world's 2 leading international financial centres, but if you compare us against our major competitors, particularly New York, those are predominantly massive domestic markets. We are an international market. We're like a penny farthing. You know, the tiny wheel is the domestic activity. The big wheel is the international activity. New York's the other way around. So the conversations we have across all parties is, be conscious it is very easy for that international business to go elsewhere.
So sort of picking up on that basis, and Anna, you spoke about this obviously is not just a London thing, it's about making sure we're talking about where we're doing things well right across the country. But in that context of, there's a potential scenario in about 9 months' time, after the May elections next year, where you've got a Labour government nationally, you've got Wales led by either Plaid Cymru or Reform, depending which opinion poll you leave, but potentially a change there. You've got Scotland led by this. You've got all these different parties that all have very different views on business and tax. Does that present its own challenges as well, or is there a consistency that you can thread through it all?
So who knows what's going to happen next spring, but it won't be the first time we have different political parties in local government, in central government, and we're used to talking to different political parties. And as Miles said, that the engagement is critical, collaboration across the board within the sector and with local and central government also critical. And if we perhaps, Angus, come to Manchester and we look at the growth in productivity we've had in Manchester, I think you can see the importance of working with devolved government. And in my sector, professional services at KPMG, we've got 17 offices across the UK, and we want to stand up and play our part with local governments, whatever party that is, in an appropriate way.
Okay, thank you very much. I think one of the things that's been spoken about, actually, certainly by both main parties, but I think is a general thing, and I think the panel's already touched on it, is about trying to get more people investing in the UK stock market. And I think trying to make that seem accessible to people and make them feel like they've got a stake in what's going on. Because I think it's very easy for all of us, people who are in the industry and people who kind of follow it and kind of invested in it in both senses of the word. But for a lot of people, this all feels very kind of, high thinking stuff. How can we get people more involved? I mean, obviously, the last Conservative government, we were talking about the British ISA. What more can we do you think?
I mean, I think, ultimately it goes back to sort of financial education in schools and getting people to understand this. And, we were chatting a bit earlier, and I think it was Einstein, I can't remember, somebody clever said that the eighth great wonder of the world is compound interest. And so you need to get people to sort of start investing for their retirement very, very early on, but you need to get people to understand it. I mean, Miles is absolutely right. Nobody's investing in equities, but they're all investing in crypto assets. And this is, so they'd rather not invest in something where you've got actual value, which is regulated, and invest in something which has the substance of unicorn breath. I mean, there's nothing behind a Bitcoin, really. You can tell I'm skeptical of some parts of this. But it's weird that people are prepared to invest. They just want to invest in something that we don't necessarily, the older people don't necessarily recognise. So I think we have to educate people about this whole concept of investing. But the flip side of this is, we want them to put money into their pension, so we've got auto enrolment. We want them to buy a house, but the trouble is, people are really struggling to find money. Now, the one thing, just following up on this political point, which where Miles is talking about, you have to work with all the parties, and that's absolutely right. I mean, we need to see what's going to happen. But I think that what we're discovering now is that there is only one right of centre party economically. Because Nigel Farage is very, very left-wing when it comes to economic policy. And one of the things that I think we need to be kind of quite wary about is something he came up with, where he's talking about renationalising utilities, but it's a point of view. But the bit that alarms me the most about that is that he's suggesting that he's going to raid pension funds to match fund the government when taking over utilities. Well, can you imagine having your pension fund having to pour £17 billion into the bottomless pit that is the black hole in Thames water. And this is the type of stuff that's coming up. So what worries me is that we've got Rachel Reeves is now sort of floating the idea of putting VAT on financial services, and this is something which is being talked about. This is kind of something else which is going to be a friction tax. We'll have to wait and see how that, whether she does that or not. We've also got a culture where everybody hates the banks. And it's, it goes back to the banking crisis where I think the Liberal Democrats want to tax the banks even more. People fail to realise that our banking sector is one of the most important elements of our economy, where it takes money from where it's accumulated it and distributes it to where it's needed. And it finances businesses, it finances growth. And it also does the amazing Doctor Who act of transferring an overnight deposit into a 25-year mortgage where we can buy a house and a home. And this is not easy stuff to do. And the banks are incredibly important, yet we hate all the banks. And at one final point, just following up on something that Helen said a little bit earlier in terms of the regulation. Actually, the FCA are doing their best to try and to change the way the regulation works to make things a bit easier. But I think one of the problems we get, getting back to negative thing about the banks, but it's the way banks interpret those rules. And so we're seeing peculiarities coming out of this where banks are not necessarily offering banking services to crypto investment companies, which are outside the regulatory regime at the moment. They kind of worry about money laundering and stuff. So I think the part of the problem is on this regulation piece is not just about how the regulator regulates, but it's how the system interprets those regulations. And if you and it's something which we in Parliament bang on about ad nauseam because of the interpretation of the politically exposed person regime, which makes it just unbelievably difficult to do any transaction if you're a member of Parliament or a general or something. So it's the interpretation of the rules which is kind of part of the problem.
Helen, do you want to come in on that point around regulation, but some of those risks and challenges with new digital currencies and things as well for the regulatory sector?
A couple of points I'd make on that. So on regulation, and Mark touched earlier on sort of digital assets and things, I think it is a great example of where we just need clarity and consistency of approach, and then we need to kind of go after it. And we've set out quite an ambitious roadmap at the FCA for how we're going to do that. I think we would also say we are trying to move to a more outcomes-based approach as a regulator. So less rules, less tick boxing, but that does require firms to then be the ones responsible for judging whether they are delivering those outcomes, and they have to be prepared to think about, therefore, what risk are they allowed to let in when they don't have to follow such a sort of prescriptive set of rules. And I actually think that's kind of quite an interesting debate at the moment. We've recently been looking at how the consumer duty applies to wholesale firms, and actually I think some of what we have seen play out over the last couple of years since the consumer duty came in is not fully as we would have intended, but that's to do in some part, I'm not saying there are things that we can do, and we've set out a sort of action plan for what we'll do over the next few months on it, but certainly in some part that is how risk compliance and teams within firms are deciding to interpret our approach and set it out. So that's why I think on the risk piece, it's kind of a conversation where all of us need to move together, regulators, the sort of sector, and the sort of political and societal appetite.
Can I just sort of follow on, actually? There's something you mentioned in your earlier thing, talking about whether you get political cover in case something goes wrong. Absolutely. From my own point of view, if a bank blew up, and we saw Silicon Valley Bank blow up not so long ago, and we brought in the Bank Reconciliation and Recapitalisation Act, which was a kind of response to that. But at the end of the day, for any system to work, there has to be risk within that system, and you have to be able to quantify that risk and measure it. And those of us who wrote the rules in the first place, involved in all the preload scrutiny and in all this stuff that created, your organisation, the PRA, and all the rest of it, we have to then back that up by saying, this is exactly, if a bank goes bust, and people get compensated and all the rest of it, but we have to back it up by saying you've done exactly the right thing. You've created a market where risk can be taken, and when it goes wrong, there's a consequence. But what you can't do is let the entire banking system collapse like it did in the past.
Sure.
So you've got cover from me.
We will be coming to audience questions in a few minutes, so if you haven't already thought up your questions, please do. Before we do, I want to come back to this core theme around international competitiveness. I mean, we've already heard around where the stock stock markets going in the UK and listings sort of falling down the global rankings. There's some major businesses headquartering in cities other than London, and I don't mean within the UK. What is it that we need to be doing? What's the ask to government, or with Mark here, what's the ask to hopefully the next government around how we keep businesses in the UK and how we attract more investment directly? Mark, maybe you've got some thoughts on this.
It goes back to what I was talking about earlier. It's about having a competitive, attractive, simplified tax regime. I think people sometimes forget that a massively complex tax regime is a cost in itself for a company. You have to get advice, you have to staff up, it becomes difficult to navigate. I've been at 2 large FTSE firms, both of which do most of their business outside the UK. We would regularly review domicile because it's just the right thing to do. Everyone assumes that, and there's usually a list of about 20 or 30 things you look at, one of which is tax. Everyone assumes that's just what's the corporation tax rate. It isn't. It is about the complexity, the simplicity, the predictability of the tax regime. One thing George Osborne did really well when he was Chancellor was he made clear the UK corporation tax rate would always be in the bottom quartile of what was at the time the G8. It just helps with planning. And it's also about making sure that we've got a competitive personal tax regime as well. I mean, for the first time, I've never in my career in this industry seen this before. For the first time, we're starting to hear some European CEOs of European institutions in the UK saying, I'm beginning to find it hard to attract people from Milan or Paris or Germany to the UK. And part of that is personal tax rates and their expectation of where personal tax rates are and where IHT is and the non-DOMS issue. So that feels like a bit of an own goal. Ties on to the second point, which is talent. London is the biggest concentration of high-skilled jobs on the planet. And that is a massive advantage for the UK. And you've seen that growth as well in places like Manchester and Birmingham and Edinburgh and elsewhere. A lot of that is connected to working well with top quality universities. A lot of that is about bringing people in from abroad. So it's keeping that open. We've talked about technology. We've talked about regulation. I completely concur. We need to give if we're going to ask the regulators to take a different approach on risk, we need to give them the air cover on it. I think it's an entirely reasonable thing for Nikhil Ratty to ask, what's the threshold here, what's the risk tolerance, and I think we need to be clear on that. But I think this also points to another thing which is harder, which is culture. We've got the culture wrong on risk. We've got the culture wrong on being adventurous and more entrepreneurial in this country. And too often people are rewarded for stopping things happening rather than helping things happen. And I take, for me, one of the worst examples of this is the recent fiasco over the attempt to build a new crossing across the Thames. We have currently spent, I think I'm right in saying, £640 million on 6 different consultations and reviews. Not a single teaspoon of earth has been moved. The solution is apparently to have another consultation, which will take the cost to about £750 million. By the time that is done, the Indian government, for a tenth of the cost, will have designed, built, launched and landed a satellite on the south pole of the moon. They've done it already. And then we wonder why nothing is happening in this country. Yeah.
I mean, in fairness, there's no crested newts on the moon, I'm aware of, so I think it's
well, I wouldn't tell the Environment Agency to check.
Anna, you nod along there. Do you want to
I just wanted to come in on that point on talent, because I think the role we play as a sector in terms of talent, particularly in professional services, nurturing the next generations of CEOs and CFOs, not just for UK PLC, but actually for the globe. And if you have a CFO that's studied or been trained in the UK, they are likely to then look back favourably on the UK as a place where they might want to come and invest. I think that element of what we do is sometimes not given the emphasis it should. We do need to continue, to Miles's point, to be able to attract top talent to London and our other major hubs. We also play a great role in social mobility. And that is so important to ensure any child, wherever they're born in the UK, has the opportunity to reach their full potential. Our sectors, financial services, professional services, are absolutely key to that.
Thank you very much. And just before we come to audience questions, one of the threads that's come through as well is talking about pensions and pension reform. And obviously the government's looking at this at the moment to see what more we can do. Helen, I'd be interested in your thoughts first on this, because there's that question of how can we make sure that our pensions are working as effectively as possible, whilst also investing in the UK, but also taking, again, we're back to that, the R word, taking that risk out of it as well. What's the work that the FSA is doing looking on pensions reform?
Yeah, so I mean, on pensions, it's obviously something where we work very closely with government and also with the pensions regulator. I think from our perspective, there are sort of three things that I think are really important in that space. So all the work that's being done about pensions dashboards, just to make it much easier and simpler for people to see, you know, what does that retirement pot look like. The second is value for money. So we've already done some consultation on this. Not to suggest we're an organisation that likes multiple consultations, but I think we're going to be coming forward before the end of the year with the pensions regulator on more on that, which is really about how do we drive that kind of appetite to look at that long-term sort of return and patient investing. And then the third, and we might go into this some more, is about how do we make sure people are being equipped to make sort of right decisions for them when they need it at a price that they can afford at the point that they're making it. And I fully agree with Mark that there's more we could and should have done to invest in financial education in this country. But given where we are, and given there are generations that have come through without that level of financial education, we can't just think the solution is to now fix this in schools. It's actually how do we equip the generations now that are picking crypto or that are struggling with costs of living, so actually aren't building the kind of right saving habits because it's a challenge just to get by day to day. It's how do we do it with those kind of populations, because otherwise we're going to miss a whole generation here that needs to be making the right decisions for their retirement.
Thank you. Mark, are we working collaboratively with government on this, or is there some common ground?
Yeah, we are. So I forgot to mention in my thing, but I'm also the Shadow Pensions Minister as well. So we're doing the pension schemes bill at the moment in Parliament, which just finished committee stage and going to report stage coming up. And a lot of what Helen just talked about is in that bill. There are other things such as auto-enrolment, and kind of one of the things we're looking at is the 4 million self-employed people who don't have auto-enrolment. So there are people who are falling through the net. But we are trying to do that. And basically, the pension schemes bill actually has an awful lot of quite useful stuff in it. The one bit that we don't like is the mandation point, which is where the government is keeping reserve powers to mandate pension funds to invest up to 10% of their assets into UK equities. We get what's behind it. So this started off with the Mansion House speech and then the Mansion House Accord in terms of trying to get more money invested into the UK to help stimulate it. But I think the government's going about it in the wrong way. Mandation is, you can't push people. What you need to do is draw people into it. And I think there are a number of regulations which are around. So, for example, on defined benefit pension schemes, and the British Telecom is a very good example because British Telecom has quite often been described as a pension scheme with a telecoms provider attached to it. But it's because of the Maxwell problems we had a few years ago, there are rules now which mean that if you're a company like British Telecom, if the pension fund goes into deficit, that appears on your balance sheet. And so I think BT have got a £7 billion deficit on their balance sheet from the pension fund. Well, what that does is drives the trustees to avoid investing in volatile assets, because we all know that if you invest in an equity market over a 20, 30, 40-year period, you're going to make a lot more than you would do if you had compound interest. But in the interim stages, and if you look back at a chart over the FTSE 100 going back to 1982, it's done unbelievably well. But I can remember the 1987 crash as kind of all doom and gloom, and the market was down 35% or something in one day. Well, that would hit a balance sheet, but it looks like the smallest of blips on a long-term massive bull market. So you would then so what you're doing is you're dissuading people from investing into equities, and you need to change those rules in order to get rid of the resistance that stops them investing into it, rather than turning around to somebody and saying you've got to invest into UK equities when they don't necessarily want to. And there's a load of other things which I can go into. But the other thing I did want to quickly pick up on, if I may, is tax simplification. 20,000 pages as our rule book. It's absolutely insane. I mean, it's great for Anna and KPMG because the tax advice is fantastic. But dare I say it, we shouldn't be spending money. We should be spending money on productive. KPMG is a very, very good fund. I wouldn't want to, just in case I need a job. We love KPMG. But we shouldn't be spending money on compliance with rules. We should get the rules out of the way. That's where you generate economic growth, is in productive assets. But the trouble is our tax system is it's, you know, if it was about raising money, we'd go to a Hong Kong system where you charge 15.5% on everything and have absolutely no caveats to that at all. The problem with our tax system is it's trying to establish behaviour. And you can see this going back to when Margaret Thatcher started the sort of the climate thing, where she brought in tax reduction on unleaded fuel to try to get people to move to unleaded fuel. You can see this and a whole load of different things. You've got tax credits on investment into research and development and businesses, all the rest of it. So the question we've got to ask ourselves is, do we want to try to affect behaviour more by having a complicated tax system which is trying to drive certain outcomes, or do we want to just actually stop mucking around with all of this and just go to what people refer to as Singapore on Thames, which actually I think that's quite nice actually. and in fact, weirdly, the Singaporeans are really unhappy about this reference to their thing. But it's but there's a simpler way of doing it. But we need to have a big political debate about that. But I would say again, keep reminding everybody at this point, the Conservative Party is the only right of centre party economically. Everybody else would not be necessarily having these sort of conversations. So vote Conservative, please.
I think I'm right. I think I'm right in saying that Singapore's tax code, I think, is about 4 pages rather than 20,000. So it's a real difference.
Too long at 4.
Maybe they use a smaller typeface. We will come to audience questions now. A few house rules. There is a roving microphone which will come to you. If you stick up your hand if you've got a question, I will identify people. When the microphone comes to you, please introduce yourself. And if your question starts with, it's more of a comment really, or here's my reflections, we would have loved to have had you on the panel. There isn't space. Please keep it to a short question, because I can see there's a few around the room. So if we go to this lady on the end here first, please. Thank you.
Hello, it's Rosie from WWF. Given the recognised threats to price stability, financial stability, market functioning and growth from climate change and nature loss, what more should this sector do to protect our long-term competitiveness in the face of these threats? And what can we do to enhance our long-term competitiveness in the face of the opportunities that these may present? Thank you.
Thank you very much. Detailed question. Who wants to take this one first?
I'm happy to go on. I think it's a really important, clearly a really important issue, but also I like the way that you've pointed out, Rosie, it's an important opportunity. We have a dedicated group that looks at sustainable finance, looks at the role of carbon markets, looks at how we can make sure that we are financing these sorts of opportunities and these sorts of issues. And look, there are clearly other jurisdictions, I don't think I need to name them specifically, that are stepping away from this. Now, we think that is not the right route to go down, and if anything, our board has asked us to double down in this area. There's going to be a terrific battle over the next 10 to 20 years to be the world's leading centre for climate finance, and my view is that ought to be the UK.
Yeah, thank you very much. Gentleman on the second row.
Naresh from the Association of Corporate Treasurers. We read a lot about AI and the impact it's going to have on a whole range of different sectors, including financial services. One of the things that worries me is at the moment London is a large employer of financial service people. There's a risk that AI is going to decimate that and also make it easier to live in Singapore and run NatWest.
Thank you very much. Anyone jumping on?
I'm happy to,
Miles, again, you're doing a great
I'm happy to
service.
kick off. I'm sure others will have views. Yes, there are risks in relation to AI. I tend to be an optimist on this. I tend to take the view that AI won't replace humans, but humans who use AI will replace humans who don't use AI. I think certainly in the experience that we have as a company using it, it is a productivity gain, it is an efficiency gain. There's clearly going to be a shakeout in certain parts of the economy and certain jobs as a result of that, but my expectation is that there will be others that will rise over time. I mean, it's notable that if we were having this meeting here in the 1980s, nobody would have considered the existence of Google or even mobile phone companies. I mean, one thing that I always use to keep my feet on the ground is the iPad didn't exist at the time of the global financial crisis. So we are moving faster and faster and faster. I think the challenge is making sure that we're equipping people with the skills and the adaptability. And there's some work that the Financial Services Skills Commission has been commissioned to do by the government precisely on this point to make sure that we've got the right skills mix in place. But I totally agree that there are some very fundamental questions here that will require industry, government and regulators to work together carefully as we move forward. But I'm actually an optimist. I think this is an area where if we can seize the opportunity, it gives us an advantage over other centres.
Helen, do you want to comment on that?
Yeah, I mean, just to build, I'd agree with Miles. I think it's something that we kind of have to embrace and think about how we seize the opportunity. Too often we kind of think about risk as what could go wrong rather than the opportunity lost by like not taking a decision or not going with something. We at the FCA are really trying to think in terms of the regulatory framework. How do we not stand in the way? So we have the consumer duty I mentioned earlier, which set the outcomes that should be delivered. We have our senior managers regime. That we think should be enough to kind of govern around it at the moment, because we'll never be able to kind of keep up with the pace of how quickly it's developing. But it's also how do we really lean in on that innovation point and encourage more financial services firms to look at the opportunities and make the most of it. We announced a really exciting partnership with NVIDIA back in June about a sort of AI supercharged sandbox, which was about saying to players across the market, not necessarily all the big ones that can really afford to be developing their sort of own AI tools, how can you come in and work with us and benefit from their technology to look at what are the opportunities here. We've talked quite a lot about sort of financial capability, financial education, and you know, yes, there might be some risks in what AI can do in that, but I also think there's lots of opportunity for making sure that products and services can be more tailored to different types of people moving forward.
Thank you very much. Anna, did you want to?
Just to build on that, Naresh, for the professional services sector, what we're seeing at the moment is a huge opportunity for us to work through possible use cases, to look at appropriate governance, spending a lot of time with audit committee chairs at the moment, looking at appropriate governance around AI, and of course getting one's data sorted. Without good data, AI is not possible. There's a lot of press around graduate jobs in our sector and the impact of AI on that. That will come. But for now, I'd look at the role apprentices are playing there. We've had a huge success in our apprenticeship programme across the financial services and professional services sector. So I think AI is an opportunity. I agree with my panellists.
Okay, thank you very much. This lady down here on the end for me, please.
Hi, Tasha Ebanks-Garcia, Cayman Islands government representative to the UK. As you may know, the Cayman Islands as a British overseas territory has partnered with the UK government for many years in the fight against illicit finance, and to that end, we've built a very reputable and successful financial services industry. And so my question is, as a member of the global British family, what role do you see the Cayman Islands, jurisdictions like the Cayman Islands, playing in ensuring the long-term competitiveness of the UK as a world-leading international financial centre? And I ask that thinking about the UK's maritime industry. So as a Category 1 British registry, we contribute to the UK standing globally, both in terms of the quality, the reputation, and the tonnage on our register that rolls up into the UK's register. So we're really clear in the maritime industry how we contribute positively. We've got formal arrangements in that. But I'm just wondering if there's an opportunity to contribute to addressing the challenge posed today.
Great, thank you very much. Mark, do you want to jump on?
Yes, I'm quite a fan of the Cayman Islands, having had the hedge funds that I've set up were registered in the Cayman Islands. And there's an awful lot of ignorance about why businesses use the Cayman Islands as an opportunity. And in the case of a hedge fund, the reason we use it is because you've got tax neutrality. So there's nothing about hiding. What you're trying to do is find somewhere where you're not taxing. So if you registered a hedge fund in the UK, that hedge fund would pay tax, and then an American owner would then pay tax on the profit of it. Do it in the Cayman Islands, you have no tax, and therefore you only have to pay your domestic tax. The important thing is, and I'm not that familiar with the shipping argument, but I guess it's probably the same argument. What's important is the transparency. And the Cayman Islands, I think, have certainly signed up to all of the transparency requirements. It's important. I mean, there's a couple of ways you can look at this. So one of this is why would the Cayman Islands want to do this? And the answer is that if you're a small island sitting in the Caribbean, there's not much you can do. But if you can offer financial services, it provides wealth for your country, and it provides a role that you can play. So it's important. If we start sort of ruling this out, then actually you'll end up just going back to fishing and a bit of tourism, which is fine, but it's not fine enough. But everybody's got to play the game, and what we do need is to have this full transparency to make sure that the people do know what's going on. You know, we're not having people money laundering or hiding assets, and that's the key point. But I'm a huge fan in terms of making sure that, you know, people like the Caribbean islands can play their role in international finance by providing an incredibly important service, which is tax neutrality for all investors into things like hedge funds.
I just totally agree with what Mark said, and just Tasha, good to see you. As you know, we take the view at City UK that the British family of financial centres is a massive national asset. Cayman's part of that, the Channel Islands are part of that, there are various others that are part of that. Bermuda's a terrific centre for insurance, and I think sometimes we don't make enough of that. In fact, I know that we don't make enough of that, and I think you've heard me say before that, you know, if we were having this meeting in France and the French had a network like that, they wouldn't stop banging on about it. I think we should be a bit prouder of that.
That's right.
Thank you. Another question. I'll go to the gentleman on the end, in the middle here. Sorry, making you get your steps in this morning, Emily. Thank you.
Thanks. Oliver Cooper from South West Hertfordshire, but by day I am a tax lawyer. Thank you for Tasha's question, because I wanted to point that out. For every pound that is spent on instructions or professional fees in places like Cayman, Jersey, Guernsey, Bermuda, between £3 and £10 is spent in the City of London servicing that, whether it be management of those funds, whether it be the legal advice that my firm would render. So it does need to be part of that mix. And it's one of those things that Rachel Reeves is now scrambling around for, which is something that boosts growth without costing a single penny in money. Make sure we bring that capital in through them. But that wasn't my question. I wanted to pick up on something that Miles mentioned earlier, which is the intersection of the non-dom regime and inheritance tax, which is really underappreciated, and how those really collide together once you've done your 4 years under the new regime in the UK. Maybe it's a question to Mark, for the whole panel, but are we going to end up having a review of that and a policy position on that that looks at those details? Because when Reform did their Britannia card proposal, they ignored that element of it completely. They hadn't done their homework. Can we make sure we do that so we go into the next election promising something that builds back our competitiveness in that space?
Thank you very much.
To my absolute shame, I missed the really important point. What exactly?
The worldwide treatment of inheritance tax colliding with the...
Oh, non-doms. Oh, it's ridiculous. I mean, it's look. So I can absolutely guarantee I'm not going to make any fiscal promises right now. Yeah. I don't want to steal Mel's thunder. You know, kind of. Well, anyway, whatever. But it's look. The principle behind it is completely absurd. It's you know, if you're going to chase away if you are international money is very, very movable. You can move it around the world very quickly. You attract people to come here and sort of invest into businesses and all the rest, and that's absolutely great. If you then turn around and sort of say your assets in Delhi are going to be taxed on your death, of course they're going to leave the country. So it doesn't make any sense. I mean, that's the one bit which people, you know, so I meet with representative organisations who come and see me and talk about exactly this, and that's the one thing that they are objecting to. So the principle of bringing it in was completely wrong, but what we've, as I say, the one thing we are as a Conservative Party is we're fiscally prudent. And by the way, when somebody makes a mistake about that, we get rid of them pretty quickly and move on. Whereas Rachel from accounts, and I shouldn't patronise that, that's very rude of me, sorry. But Rachel Reeves and Keir Starmer are making a real pig's ear of the economy. It's up to Labour really to do what we did when we got it wrong, is that's get rid of their bad leaders and get somebody in who knows what they're doing.
I'd just say we are engaging with Treasury on this, have been engaging with Treasury on this. We've made this point. It is already a disincentive, to the point about talent. It's already a disincentive to coming to the UK. And we are seeing the impact here in places like Dubai, in places like Milan, in places like Switzerland, and to a degree in places like the US. It's a competitive disadvantage, and we've made that very clear.
Thank you very much. Unfortunately, that is all that we have time for today. I think I'll just sum up the kind of the answer to the question, I think, is and thanks to Miles for providing it right back at the beginning of the session, but I think it falls into 4 T's, basically, which is tax, technology, talent, and tape, by which I mean regulation. But so the 4 T's is what you can take away from the session today. Thank you to all of our panelists again. Thank you to all of you for joining us. Thank you to everyone watching on the live stream, and have a good conference.
Yeah.